Hello, my name is Eddie Tofik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat.
Paris milling wheat. For a change, Paris milling wheat is different from Chicago, Kansas City and Minneapolis wheat. Here there is one dominant pattern, a quite large pattern that is coming towards its cusp. It is of course the dark blue highlighted late August 2024 to date ascending triangle pattern, currently 233 to 241. This pattern has the requisite combined 5 touches and is made up from a lot of smaller patterns within it, but is clearly seen on my daily chart. In the past, and I suppose even now, the topside has been capped here to a certain degree, and most certainly defined at least, by the bright red neckline extension to the June to November 2023 head and shoulders top, currently at 238. This is happening again, so please keep an eye on this, especially going forward. I cannot give definitive targets topside or below for this large dark blue ascending triangle pattern as yet, as we haven't had a true break higher or lower away from it. But I can give some idea of the potential should we see a break higher or lower. Thus, on the top side, a primary potential will be up in the 258 area, for secondary harder to reach potential up in the 279 area. Likewise, on the downside, we would have a primary potential in the 226 zone, for secondary harder to reach potential down in the 194 zone. Now, it is now a third week where I give a strong word of caution. We are so advanced along this dark blue ascending triangle that the chances of a false break higher or lower are very, very high. So supreme caution on any suspected move in either direction. So if we do break higher or lower, what should we look for as support and resistance? Well, because of the size of the pattern, these would be quite away from the current market, but please still bear these in mind, and they are from the same source. Topside, I look to the resistance provided back in May last year from the 61.8% absolute Fibonacci line at 270. Likewise, I look below to the 50% absolute Fibonacci support, which helped hold up prices in November and early December last year, and eroded the bearish incentive back in August and September as well. Now that support is down at 219. Minneapolis wheat. The market here in the past had been a little different when compared to Chicago, Kansas City and even Paris wheat. However, not so much this time. Last week mostly saw the start of the week take a breather within a late January to date bull channel come ascending wedge pattern. That's currently 638 to 662. However, last Thursday until yesterday saw a resurgence of the move higher. It's been here since just after the start of the year. This move up here is becoming consolidated as in Chicago and Kansas City wheat. The market moved up over the interesting April 24 low at 635 and is now eyeing the November 2017 high at 667 and the 50% Fibonacci line, the May to August 2024 move at 670. The latter had effectively capped the market back in October last year. In the overall picture, much like Chicago and Kansas City wheat, this market here has 2, possibly 3 or more major features that have developed, or should I say are developing in this market. The first and by far the largest is the late May 2024 to date possible very large double bottom pattern. We're at this time constructing the second up leg in this pattern, and the key to the breakout upwards I suspect be around that 50% Fibonacci line of the May to August 24 move at 670, though it could be also the higher, though still nearby, May 2021 low at 676. Now, I'm sorry for being a little bit vague here, but this really is a very, very large pattern. The second pattern is more recent, though still quite big. It is the early October 24 to date rounded bottom pattern. Here I would look to the May 2021 low at 676 as the final of the construction and the start of the breakout. However, there is an argument for looking at the congestion in late October to early November 2024 in the 620 to 635 area, just around where the slowly declining gold long moving average is situated, which is currently at 631, as being the breakout point, though I am more cautious and would still favour the higher 676 area. However, just keep a wary eye on that 631 area just in case. Next, we have the bright red bullish shift pitch walk here for the late August to early November 2024 move. Right now, the market's a little underneath the middle tie and above, currently at 658. This pattern in its own way is supporting the move higher. We also have the market seemingly breaking up through a major resistance actually breaking up through a major resistance 2 weeks ago and looking now like it is stabilizing and now using it as support. And I'm not referring to the gold long moving average or the April 24 low at 635. No. I am referring to the dark blue July 23 to February 25 downtrend. It's quite a long one, currently at 618. We are now above that significant downtrend and stabilizing over it, as well as moving higher. So what have we in the way above that might change this seemingly significant attempt higher? Well, not a lot. We did have the gold long moving average and the April 24 low to a certain degree trying to cap prices, but apart from the 50% Fibonacci line at 670, we have the near to it November 2017 high at 666, I suppose, and a small congestion band 650 to 652 based around the August 2018 high at 650, though this last one has been breached this week. However, the dynamic rising resistance of the bright red middle time, currently at 658, might be a touch more problematic to any rises. Despite all these, the top side continues to seem vulnerable right now. London UK feed wheat. There continues to be here on this daily chart, even now, these many weeks and months even, only one major significant pattern, and that is the bright red late May to early July 2024 bearish shift pitch walk. The market is right now back below the upper tie, currently at 181.15, after breaching higher for a short while, not being able to fully stabilize over it. Add to this the narrow mix of literally all the moving averages between 180.55 and 183.15, as well as the 50% absolute Fibonacci Fibonacci line nearby, which is at 180.5. And you have a close together, compacted zone and area now overhead that is possibly brewing up for a significant move. I was, as I said 9 weeks ago and ever since, and I quote, even now, still looking for that better pattern to appear. Until that shows up, I will continue utilizing the bright red bearish pitchfork, end of quote. This leads me to my final 4 points, and 3 of them were something that I noted in my recent annual commentary on London feed wheat. Firstly, I saw there the potential for a very large May 2023 to date cat's ears pattern. This is a bearish pattern, akin to a double top, formed after a big fall, such as the fall we had earlier in 2023, as well as an even longer term second pattern, an August 2020 to date, very large head and shoulders top pattern. These 2 super long term patterns are still live, and they both rely on one feature below the market, and that is their common neckline, highlighted in dark blue on my daily chart, which is currently at 167.40. The third feature is a little closer to the market, but a little more longer term. It is the March 2016 to date uptrend, highlighted in purple on my daily chart, and it's currently at 176.45. Now, there is one major, possibly severe criticism of all 3 of these patterns, and that is they have all been previously breached, and some would argue broken. However, I have transferred these from my longer term monthly charts, and whilst on a daily and even on a weekly chart they may be or appear to be breached and broken, on the longer term monthly charts where they really live, they are still somewhat valid. And so I would not take these as cast iron lines in the sand, if you like, that should not be crossed, but as longer term strategic patterns that we should bear in mind and occasionally bring a closer eye upon. Finally, I drew last week a bright green January to February 2025 base bull channel. This at the time had some merit until late last week, when prices initially breached the downside late last week and then broke down through it this week completely. I will look to downgrade this pattern after today.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.